morning, and welcome to your Monday morning market update from Island Park Private Wealth. Here's what you need to know heading into the week. Markets traded lower last week as tensions in the Middle East escalated further. The U.S. carried out its 13th consecutive night of strikes, and Iran continued targeting tankers in the Strait of Hormuz, one of the world's most important oil transit routes. Yemen's Houthi rebels raised the stakes even more, threatening a naval blockade against Saudi Arabia and opening a second front of disruption in the Red Sea. The result, WTI crude climbed above $90 a barrel, and Brent crude briefly touched $100, both 6-week highs. Diplomatic progress remains limited, with Secretary of State Marco Rubio saying Iran is, quote, not serious about talks. That surge in oil prices pushed straight through to the bond market. The 10-year Treasury yield rose above 4.70%, a new 52-week high, as inflation concerns crept back into investor thinking. Fed funds futures now assign better than 80% odds to a rate hike at the September meeting, up sharply from around 50% just a week ago. Energy and interest rates are more tightly linked right now than they've been in some time. Against that backdrop, the S&P 500 and Nasdaq each fell about 2% on the week, with the Russell 2000 close behind. Most equity factors, growth, value, equal weight, traded lower as market breadth weakened. The two bright spots were momentum and high beta, which bounced back after recent semiconductor weakness. On the sector side, energy and utilities led, while consumer discretionary dropped nearly 7% as rising oil prices weighed on consumer-facing names. Bonds sold off across the curve, the VIX climbed back toward 20, and the dollar strengthened to a one-year high. On the earnings front, Alphabet posted a strong second quarter, revenue up 24% to $120 billion. Google Cloud revenue up 82% and expanding margins, but the stock still fell about 5% in after-hours trading. Why? The company raised its 2026 capital expenditure guidance to $195 to $205 billion and signaled even more spending in 2027. Notably, quarterly free cash flow turned negative for the first time in company history. The market isn't questioning whether AI is driving growth. It clearly is. The question now is whether that growth justifies the price tag. The dollar's move to a one-year high adds another dimension worth watching, particularly for anyone with international exposure. A stronger dollar can be a headwind for overseas returns. Looking ahead, this could be a pivotal week. The Fed's two-day meeting wraps up Wednesday with a rate decision and press conference, a chance to see whether officials treat this energy-driven inflation pressure as a reason to shift policy. Microsoft and Meta report earnings that same day, adding more data to the AI spending debate. Thursday brings the Q2 GDP estimate and the June PCE index, the Fed's preferred inflation gauge, along with earnings from Apple and Amazon after the close. Oil, AI returns, and the Fed's next move will all be tested within about a 48-hour window. That's your update for the week. As always, if you have questions about how any of this affects your portfolio, reach out to our team directly. Have a great week ahead, and thank you for your continued trust in Island Park Private Wealth.